Good afternoon, everyone. Welcome to the County Employee Retirement System's regular meeting of the Finance Committee. It's November 24th, 2025, and I declare the meeting in order. Mr. Bronco, are you available to do the legal public statement, please?
Of course. This is a regular meeting of the County Employees Retirement System Board of Trustees Finance Committee. This meeting is being broadcast via video teleconference pursuant to KRS 61826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road in Frankfort, Kentucky. It is also being broadcast to the public live via Facebook. If you are speaking and not appearing by video, please identify yourself before talking. If the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to a later date.
Thank you. Ms. Rankin, can you do the roll call for us, please?
Yes, sir. Mr. O'Meara?
Here.
Mr. Cheatham?
Here.
Mr. Fulkerson?
Here.
Dr. Carver?
Here.
And Mr. Webb?
Here.
Thank you.
Thank you, Ms. Rankin. Do we have any public comment for today's meeting?
No, sir, no public comment today.
Then we'll go to the approval of minutes for August 18th, 2025. Do I have a motion to approve, please?
So moved.
And a second?
Second.
Thank you. First and second. Any additions, deletions, comments on the minutes? Hearing none, all in favor, please say aye.
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 Opposed, no. That passes. They're approved. We move on to the external audit section. And Mr. Lamb, could you do the honors to walk us through that section, please?
Yes, thank you. Today with us we have Leland Miller and Roger Alfaro. They're from our external audit firm, Eide Bailey. They will touch base on a few reports in this draft CERS ACFR, including their draft independent auditors report, which is on page 17, their draft internal control report, which is on page 66, any management letter comments they may have for us, and they will walk through their required communication with those charged with governance, and that's the CERS board, and that will begin on page 1112. But before I turn this meeting over to them, I wanted to let you know that this draft ACFR was ran on November 18th. Since then, we've made several minor changes, nothing significant. But if you do see anything that you feel like we may have overlooked, please let us know. We'd be happy to go through and double check that and make the changes before we forward the draft ACFR onto the full CERS board. So with that, I will turn it over to Mr. Miller and Mr. Alfaro.
I guess that's the cue for me. Sorry about that. My name is Leland Miller. Also with me is Roger Alfaro, who both of us are partners with Eide Bailey. First of all, we really want to thank you for the opportunity to be able to work with you guys this year. First time audit, going through the process and everything. And so we really appreciate this opportunity to go through and do this audit. A lot of times people always ask, well, how was the first year? From our perspective, it was a very typical first year. From Mike's and everyone else, they probably thought it was probably a little bit more than definitely different from a typical audit, just for the fact that being new auditors, gaining an understanding, going through and doing our testing and everything. Whereas, we come to the same conclusion as the other auditors, but we do things differently. And so we really appreciate Mike and Connie and everyone else that was heavily involved with getting through all the information, going through the reports and everything to be able to get to this point, at least to discuss a draft of the financial statement. So again, kudos to everyone there from your side of the accounting department and all others as well. So, just really briefly, what to talk about a couple of things. Just a brief introduction of our firm. We are well, we're from coast to coast. We've got offices throughout the U.S. We focus mainly in the central and the western states, providing your typical CPA accounting auditing services. Our our main headquarters, or not main headquarters, but a number is was initially out of Fargo, but we've got offices, like I said, all over the U.S. One of the key areas, that from an industry perspective, is our government services group, providing audits and other services for our state and local governments. And within that, we have a subset. And one of the larger groups is the public pension plans. Some of our other states that we do is Idaho, South Dakota. We've got West Virginia just down the road from you, and so we have a core group that specializes in doing the public pension plans, and so we're bringing in a good team, a great team to be able to take a look at and also have an understanding because of uniqueness and so forth when it comes to the public pension plan. So that's just a brief introduction of the firm. Besides Roger and I being the partners that are responsible for the audit, we also have some of the key employees that are part of the team and everything. And so we've got a senior manager. We also use some internal experts. And we have an actuary who goes through and reviews the actuary reports just for reasonableness. We don't go through and are redoing the calculations or anything, but just on the major assumptions. We also have an IT group that will go through and just look at internal controls over the accounting process from an IT perspective. And so we bring in experts like those just to help to provide effectiveness from an audit perspective, but also if there's things that we see or best practices, we can bring those up. And then, of course, we have seniors and staff that would all round out the team. And so, the biggest thing, the number one question everyone wants to know is that when it comes to our audited opinions. And so, as Mike mentioned, it sounds like that the auditor's opinion, the draft is page 17. I'd like Mike mentioned even from the financial statements. Also with our reports, we've got some minor changes that we've made to the reports. We are going through our last required review of all the work papers and the financial statements. So so this is what was sent to you a week ago. We've got some minor changes. However, nothing substantive or anything to change. I think the first thing to focus on is that first two paragraphs, the opinions. We are proposing and anticipating that it'll be a clean opinion for the financial statements for June 30th of 2025 for CERS, and that the financial statements being presented are materially correct based on the procedures and the things that we've done to be able to get to that point. So those are the first two paragraphs. The rest of the auditor's opinion, next the 3 pages, is just what is our responsibility, management's responsibility, and just spells out some additional information. Plus, for the fact that there are other schedules and other sections within your annual report, whereas some we do some procedures on it and everything, and so we bring to the attention to those that are reading the auditor's opinion of what exactly, like for instance, you have an introductory section and you have an actuarial section and an investment section. Well, we don't give an opinion on those, but we will review those for reasonableness, and so that's also included in the auditor's opinion. But the bottom line is the first two paragraphs that we're issuing an unmodified, a clean opinion report for 2025. So, and then the other report that's ours is on page 66. As auditors, we are required to go through and one, gain an understanding of your internal controls over your accounting system. So we'll go through and we'll document the key portions of your accounting system. We'll perform what we refer to as a walkthrough. We'll take an invoice, making sure that it goes through and it has all the proper approvals and everything on that invoice. We'll look at payroll contributions or some of the areas that we'll take a look at. So with that testing, plus also any other testing, if things come to our attention that there was a breakdown in internal controls, and if it meets the threshold of being considered as a material weakness or a significant deficiency, depending on the severity of the breakdown of internal controls, we are then required to put that in writing, and that's what this report here is for this year. And we're happy to report that based on the work that we've done, nothing came to our attention that we needed to report to management and also to the finance committee and eventually to the board. So again, kudos to everybody that starts here with this group, with the board and the management, making sure that internal controls have been identified and internal controls are being followed. And we're happy to report that we didn't have anything that came to our attention. So that's the thing to point out when it comes to these set of financial statements. These are the only two things that are ours. Everything else was prepared by Mike and his group, and so what says a lot about your accounting department. So those are the two main reports when it comes to the audited financial statements. We're anticipating to do a report to the board next week, and then sometime next week that we will be issuing the final financial statements. So at this point, I'll turn over to Roger, and he'll discuss a few things when it comes to our letter to those in charge of governance.
Thanks, Lee. Members of the committee, in addition to the documents that Lee was referring to, being the opinion and the consideration of internal control, we also provided within your draft a required communication. And to highlight or summarize certain aspects of that draft communication, we'd like to point out that the audit was performed in accordance with generally accepted auditing standards here in the United States. That also includes government auditing standards, which is why Leland was referencing the GAGAS report, of the Internal Control Considerations report. As part of the audit process, we always point out that management's responsible for those financial statements with oversight of this committee and the board, and the audit does not relieve management or those charged with governance with that responsibility. The audit provides reasonable but not absolute assurance that the financial statements are materially misstated, that are not materially misstated. Let me rephrase that. Inherently in the audit process, we perform a variety of procedures that include sampling and other types of procedures, but when you combine that with the inherent limitations of internal control, the audit does not provide absolute assurance that the financial statements are free of material misstatement. The audit process does entail us considering the internal control over financial reporting, and it also, as part of that process, we consider laws and regulations that could have a direct and material impact. While we do consider those elements, as my colleague shared, if we identify any deficiencies as part of our work, we report those out. But the audit does not provide any assurance regarding regulatory compliance, nor does it provide assurances regarding the internal control over financial. Within the financial statements, there's a summary of significant accounting policies, which serves as the basis for various points of recognition of transactions within the systems. And that's referred to as Note A. As part of our responsibilities, we do review that summary to, one, ensure that those accounting policies are being applied consistently from period to period. And we also consider whether those summary of significant accounting policies are consistent with industry standards. As part of our communications, as we've noted, these reports are in draft, and as part of the process, we will be obtaining a management representation letter prior to the finalization of these documents, which is a letter that's on the system's letterhead to us that reaffirms many of the representations that that have been shared during the financial statement audit process. One item to note is that we do work very closely with management, and that's necessary to help facilitate the field work that we perform, whether it's meeting with individuals within the organization, reaching out to third parties to confirm transactions or balances. But we do work closely, but our role ultimately, from an independence and an objectivity standpoint, is to report to the committee and the board. So we're reaffirming that. As part of the audit process, if we become aware of any consultations with outside accountants regarding audit, accounting, or financial reporting issues, and we become aware of those types of situations, we have a duty to report those out to you. To our knowledge, we're not aware of any outside consultations during this process. We are pleased to report that there were no disagreements with management or difficulties with management with respect to accounting, auditing, or financial reporting matters. The team there at the systems was professional in providing us access to the numerous individuals within various departments in the organization outside of finance or third parties, as well as documents that we needed to complete our work. We are, as noted in our drafts, we did not report any material corrected misstatements or material audit adjustments that needed to be made to the financial statements based on the evidence we gathered. Inherently in the audit process, we perform procedures and we identify differences, and those differences can be from a variety of things, timing differences, minor differences, based on the procedures that we apply. We did include that we identified some past audit adjustments, which refer to amounts that we discussed those with management. They deemed them to be immaterial to the financial statements, and we concur with those assessments. And so as part of our testing, we identified some past differences related to the investments. And that's partially attributed to certain timing differences, as well as information that gets received subsequent to year end from the point in time that the books are closed from investment managers. Again, past audit differences, they don't impact the opinion. We understand we were going to identify some of these items based on just the routine year-end closing process. As part of the audit, there are certain areas that are potentially more susceptible to misstatement. We refer to those as significant risks. Every audit has significant risks. All that means is, as external auditors, we consider these areas where we devote specific attention and specific resources to perform procedures in those areas. Just to recap, for the audit that we performed, the areas that we deemed to be significant risks were management override of internal control, contribution revenues and receivables, calculation of initial benefit payments, valuation of alternative investments, and then the pension and other post-employment benefit liability information that gets included along with the actuarial information and financial statements. So that the audit process did entail us devoting time and attention, gathering evidence in these areas to be able to reach this point of assessing the financial statements of the systems. Lastly, we confirmed that in our professional judgment for the year ended up to today, we are independent both in appearance and in fact in accordance with professional standards. And at this point, this concludes my remarks, and I'll turn it back over to Leland.
All right, thanks, Roger. Again, we want to thank everybody for their efforts and everything and be able to get us to this point. So This is quote unquote our formal presentation. I guess we open it up for any questions or anything from the members of the committee.
I have a question. On the very last page we looked at, it says Boise, Idaho on the bottom. What's that for?
That's okay. What it is that as auditors, under the auditing standards, is that wherever the signing partner or where the majority of the team comes from, we are required to put our city down. Now, at the top, we address it to CERS, and it points out that it's in Kentucky, and so that again is just reference to the firm and which office was where the majority of the team or others participate in audit. Just to be upfront, Roger's out of one of our California offices, and there were some team members from California that participated on the audit. We put together the team that worked best for Kentucky and has the right kind of experience and everything from it. So probably more information that you wanted, but that's why it says Boise, Idaho, because we're required to put that there.
Thank you.
Well, I'd like to take this opportunity to thank you all, and thank you for bringing such good expertise to the audit, and glad to have a clean opinion as well. So just wanted to appreciate your all's efforts. Glad to hear that the audit went well. Lots of cooperation amongst the team, and want to thank you for bringing that expertise.
All right.
Yeah,
Thank you.
I'd like to thank Leland and Roger and his team. They've been great to work with. They've been very cooperative with us. And, again, being a first year auditee of them, a lot of questions, and my team felt overwhelmed at times, but they extremely professional, and your knowledge and expertise has been great to have this year. So thank you.
One quick question. Are all parts of the audit now in what we've got in our board book compared to what the audit committee saw last week?
Yeah, so the audit committee also saw drafts of both the K and the C ACFRs. I don't think there was any missing sections in the audit committee report. And so this should be maybe a more current draft.
Auditor's letters weren't in there. Again, like I said, my question is just simply, is this it? Is this the complete version of this document that we'll be asked to approve next week?
You will see, yes, there's no additional schedules or letters being added to this version that will go before the CERS board. There will be some additional commentary or spelling changes, and I will try to point them out next week if we have them, but you won't see any additional charts, financial statements, or letters.
Okay.
Yes, I have a question. While we got a clean opinion, and I'm happy to hear that, were there any areas that we should be pay a closer special attention to for the next year?
No, there's nothing that's significant. I mean, and as Roger had pointed out and had given you the high level review of those significant riskier areas, and that's not just specifically just for you. I mean, we have those on all of our other public pension plans, but they are the areas where if there is ever an issue, those would be the big areas. So there is nothing that came to our attention where we've got in any grave concerns, one or two, or anything where there's a gray area or something like that. All your people were professional. They knew what they've got processes and they follow their processes. And that when we're asking them questions, and everything, they came back with the good answer, also answered where they could be supported with proper documentation. So short answer is no, there's nothing more that you would really need to be concerned. I think it's just the continual due diligence, the efforts of everyone making sure you're following your processes, your internal controls are being followed. I mean, so that's just an ongoing continuing process, every day, every year, type of a thing. So, but nothing of significant concern of other areas.
All right, thank you so much.
Anyone else? Mike?
No, that's all I have on that topic, and I want to thank Leland and Roger for joining us and for their presentation. Thank you.
Well, so
Thank you.
I think I'm supposed to ask if there's a motion to accept the CERS external audit for fiscal year ended June 30, 2025 as presented, and to forward it to the CERS board for approval.
So moved.
Thank you. Do I have a second?
Second.
First and second. Any other discussion? Hearing none, all in favor, please say aye.
Aye.
All opposed, no. All right, that goes next week to the CERS board. Thank you all very much. I appreciate it.
They might have already jumped off.
Yeah,
Okay,
okay.
great.
So you can take us to the next item, I believe.
Yeah, in board books on page 116. So as you know, last year was the first year for the CERS ACFR as a standalone ACFR. We submitted that to the GFOA for their annual award in the Excellence in Financial Reporting. They did review that ACFR and they awarded that award to CERS, and they had a couple comments for us to consider as we did the 2025 ACFR, and those comments are presented there. There was actually 4 areas. One of them had to do with the table of contents, and basically had to do with the formatting of the basic financial statements in the title as well as the notes. And so our comment back to them will be as follows. Management concurs with the recommendation, and for the 2025 ACFR, the same font is used for the basic financial statements and the notes to the financial statements. In addition, the second comment under that area had to do with the segregation of the 5 essential sections of an ACFR. There's an introductory section, a financial section, the investment section, the actuarial section, and the statistical section. And it wasn't clear in the table of contents that there was 2 subsections called required supplementary information and other supplementary information. Those are part of the financial section, and it kind of indicated that they were separate. So this year, we also concur with that recommendation, and the table of contents depicts that the required supplementary information and other supplementary information are part of the financial section, and the 5 essential sections are color-coded to depict the different sections. The next comment had to do with the note disclosures and pension, and as we split the ACFRs up and reworded some of the notes, we failed to identify CERS as a multi-employer cost-sharing plan, and they pointed that out to us, and so we did concur with that recommendation and have updated the notes to the financial statement, and actually note B, where we identify CERS as a cost-sharing multiple employer plan. And then in section comment 114 in front of you there had to do with the RSI, or the required supplementary information. Again, in the table of contents, it kind of identifies some areas as RSI when really they're other, and so we have separated them as well, and the reference to the other supplementary information has been removed from the required supplementary information in the table of contents. So this is a letter that we will send along with the approved ACFR after it gets published on the website to the GFOA for consideration of the award next year. And we would like a motion to carry this forward to the CERS board for their approval to do that when the time is appropriate.
Do I have a motion?
So moved.
And a second?
Second, Mr. Chairman.
Thank you. All right, discussions. I would pass on a comment from the audit committee. from someone who in life past used to review these for the GFOA and said that some of these are the comments you make when you can't really find any substantive things to comment on. So we appreciated that comment. I thought I'd pass that on. And for a first time with the reporting separately, I thought it was very well received and very pleased with the type of comments that you received. Your staff did a fine job, Mr. Lane.
Thank you.
Any other comments or questions? Hearing none, all in favor to approve and pass this on to the CERS board, please say aye.
Aye.
Aye. That's 2. Any opposed? No? That's passed. Thank you. And now the quarterly financial report. Still with you, Mr.
Yes, you've got a lot more of me, I think, unfortunately. So near the bottom of page 119 on the board books, this is the first quarter results for CERS. The total fiduciary net position is at $20.8 billion. That's up 8.61% or $1.7 billion from the $19.27 billion at the end of September of last year. The 2 pension plans total $15 billion, and that's an increase of 9.3% or $1.3 billion. The 2 insurance plans total $5.9 billion, and that's an increase of 6.92% or $382 million. In the middle of that same page, the investments at fair value have increased overall by 10.08% or $1.9 billion. The pension plans are up 10.7%, and the insurance plans are up 8.55%. The largest increase in value is with the public equities, which is up 8.52% or $786 million compared to the same period last year. And that's followed by a real return of $508 million or 68.56%, and specialty credit is up $343 million or 9.03%. If we scroll down near the bottom of page 120, we can see that the change in fiduciary net position, in this case, which is positive, it's an increase of $711 million. The same quarter last year was $744 million, so this year's quarter is 4.33% lower, or $32.2 million less than it was last first quarter. The pension plans show a $369 million. The pension plans show $369 million and $150 million net increase, respectively, for a total of $520 million. So that's the 2 pension plans, 368 and 151. The prior year increase was also slightly higher by $17 million at $357 million, or $537 million total for the pension plans. The 2 insurance plans show $137 and $55 million, and that's for a total of $192 million, and that is $15 million or 7.28% lower than, again, the prior year first quarter. The lower amount of $32.2 million between the current year and the prior year change in the fiduciary net position is due to lower overall net investment income being $38 million less, benefit payments being $9.3 million higher, offset by increased member contributions of $5 million and increased employer contributions of $8 million. And we can get into some of the detail of that on page 122 when we get into the contribution reports. So the first contribution report on page 121. Yes, thank you. For the first quarter of fiscal year 26, the pension plans received a total of $284.1 million in member and employer contributions versus $270.3 million, and that's $13.8 million more than what was received during quarter 1 of fiscal year 25. The member contributions were up $5.1 million, employer contributions were up $5.4 million, and employer pay credit was up $3 million. So the pension and employer contribution rates for C non-hazardous have decreased from 19.71% to 18.62%, and for CERS hazardous from 36.49 to 34%. However, salaries for quarter 1 were $35 million higher, We calculate 2,000 more participants for CRS non-hazardous, and then for CRS hazardous, the salaries were $16 million higher, with 209 more participants. These increased salaries and headcount have led to increased employer contributions despite the decreased employer rates. And the increase in salaries and headcounts or participants has also led to higher member contributions in this quarter versus last year's first quarter. The net investment income for the two pension plans were $94.9 million, which is 69.6 plus the 25.3, and is 18.1 million or 23.5% higher than the prior year amount of 76.8. Both pension plans paid out $378.8 million in benefits, refunds, and admin expenses versus $371 million in the prior first quarter. That is $7.5 million more, or 2.02% higher than the prior year. The results of all of that show that this net contribution line that's highlighted in the middle, the CERS non-hazardous pension plan had a negative net contribution of $14.1 million, and the CERS hazardous pension plan had a positive net contribution of $14.3. However, when we remove the net investment income of $69.6 million and $25.3 million respectively from both plans, the C non-hazardous plan has negative $83.7 million in cash flow, while the CERS hazardous plan has negative $11 million cash flow for the first quarter. The next chart is the insurance plans. And we're just going to start with the net contribution line there. And as you can see that the C non-hazardous plan has a negative net contribution amount of $1.3 million for the quarter. And the CRS hazardous insurance plan has a negative $9.2 million. If we do remove the net investment income of $23.9 and $11 million respectively, the bottom chart or the cash flow chart has net contributions at negative $25.2 million for the C non-hazardous and negative $20.2 million for the C hazardous plan respectively. That is the quarterly financials. Any questions on those before I move further?
Any questions for Mike? Go ahead, Mike.
All right, thank you. Next page down, we'll get to the past due invoices as of September 30th, 2025. Again, this was the invoices that were open and past due as of September 30. It is now November 24th. Several of these have been paid. There are some comments. These are the top 10 employers according to outstanding balance and the type of invoice in there. The largest one being Kentucky River Regional Jail. As you know, that is with KPPA Legal. So the total past due amount is $965,000. In total, the total past due amount for CERS was only $1.58 million, and so this one particular employer makes up the biggest percentage of that. The next employer is the Elliott County Ambulance Service. That is also being handled by KPPA Legal at this time. The third one on the list is City of Jeffersontown, and all of those invoices were paid in October, even though they were paid in September. Further, Housing Authority of Sturgis has also paid a significant portion of their past due balance. And then there's a few others that have not yet been paid as of 11/14, the day I checked these before I sent this on to the committee. And then those are the general comments related to those employers. If you look at the chart at the bottom, we've been tracking this since June of 2024, and as you can see that there are a significantly less amount of past due invoices as well as quantity. And so at September 30, 2025, there was 587 past due invoices totaling the $1.5 million discussed above. In comparison, in June 30 of 24, there was 1,623 past due invoices totaling $3.6 million. So our ERSI group and our legal group continue to work with the employers in addressing any issues in past due invoices that we have. If I can skip this next page and go on to page 128, it's still related to, yeah, thank you, right there. This is the penalty invoice report for the quarter. So during the first quarter, we had 5 penalty invoices related to CERS employers that were waived or canceled. That totaled $7,408. 14 of the penalty invoices that were created for a total of $14,000 for the quarter, and then 52 penalty invoices were paid during the quarter, totaling $53,973. So if you wanted to jump back up to page 123, that's where we can start the admin budget. Before I do that, I just wanted to pause to see if there's any questions on past due AR for CERS.
I want to acknowledge the favorable graph that you showed us and say that we appreciate the efforts and the results.
Thanks. There's been a lot of people working on that, so it's been a good result for C for sure. Okay, so this is the summary table for the admin budget for the first quarter. As you can see, the budgeted line item on the bottom left, the total budget is $49,969,700. I have some comments. If I think you page down to the next page, these are very high level. They address just that chart, but basically KPPA has spent $9.1 million in the personnel staff category for quarter one, which is 24.22% of the annual budget, leaving 75.78% for the remaining 3 quarters, and that's 3.23% higher than last year's first quarter. I wanted to point out there's a locality premium line item in the detailed budget that has 0 budgeted. We actually included that in our salaries and wage line item, the budgeted amount for that, but we are tracking the actuals separately, so that can help us identify the locality premium that we are incurring related to certain positions. The legal and auditing services, we've only spent $161,000 or 7.81% of the annual budget, leaving 92 plus left. We have not yet received all of the invoices related to the Act for audits. Those will be coming for sure in this quarter that we're in. And then all other personnel categories were well under budget through the first quarter. In the operational categories, we spent $1.5 million, leaving 78.06% of the budget for the next 3 quarters. And then overall, total admin expenses through quarter one were $11 million, which is 2.44% higher than the prior year's comparison first quarter, leaving 77.84% or $38.9 million more of the original $49.9 million budget. One thing I did want to point out, that 49 total budget, we also received an additional $146,000 from the Office of State Budget subsequent to this budget being approved by the KPPA board. So that brings our actual budget amount in total up to $50,115,600. And most of that money was related to such things as locality premiums and increased salaries. And so we'll currently carry that additional balance in the reserve until, or if it's ever needed, and then we'll bring that to the board for approval to use if needed. So I have the detailed admin budget below. If there's any line items you'd like me to go over, I can do that, but for the most part, everything is in line for 1 quarter's worth of activity.
Any questions of Mike with his presentation?
What happened with insurance, Mike?
So insurance is a one-time premium. It's $12,000 is what we were charged. I actually overlooked budgeting that. I think I budgeted $7,500, but that won't go up anymore. It's one time paid up front in July, and it covers the entire year for our risk. And
I figured that was your $7,500 last year's premium, and they went up that much.
it was actually 2 years ago premium. They sent me the premium. It got lost in my emails as preparing for the budget, and it was overlooked on my part in updating that amount.
Okay, so I understand it is what it is. No question. I just wondered if that premium jumped that much. You remember? Do you have any idea what it was last year then?
I think it was close to 7,500. So they do send us a listing of all of our property that we need insured. that's owned by KPPA, like our computers, our laptops, all of that stuff. And so that was sent in there. I think their premiums just increased overall from year to year based on that annual inventory of items to insure.
Okay.
At the bottom of that page, you'll see the hybrid allocation chart, and this is how that 11.1 million that was spent in the first quarter has been allocated to the 5 pension plans. And then the chart below that shows we've been tracking the JP Morgan fees and interest that have been earned with the new contract for JP Morgan through the Commonwealth. We are no longer being charged fees at all, and we only being paid hard dollar interest on all of the JP Morgan Chase accounts, and those are the accounts, the interest earned on those accounts and how they've been allocated to the systems.
Thank you, Mr. Land.
Yep.
Anyone have any last questions for Mike? Okay, hearing none, we'll go to hazardous duty request. Mr. Sherratt, can you walk us through those?
Yes, I can. Good afternoon. Today we have 17 positions being requested for hazardous duty coverage. All the positions are police, fire, and we have 1 paramedic position. KPPA staff has reviewed the position questionnaires and job descriptions for each position submitted, and they do meet the statutory guidelines for hazardous duty. If anyone has any questions, I'm happy to answer them. If not, I would like to request the committee approve these positions to go forth in front of the CERS board for final approval.
Is there a motion to approve the hazardous duty coverage request as presented?
So move.
Do I have a second?
Second.
Thank you. Any questions for Dwan? Okay, hearing none. All in favor, please say aye.
I
Oh,
have a question.
go ahead.
I noticed some of these are dated back to 2019. Can you explain that?
Yes, we have been working with that specific agency. They have been reporting persons in hazardous duty positions, but they are not the correct positions. They weren't reporting the correct positions because they were never approved. So in working with them, now we're getting approval from the board for those positions. Once they are approved, we will go back and correct those records.
All right.
Does that answer your question?
Yes, I was just wondering why it was. I mean,
Okay, yes.
Okay.
You're on a little bit off subject, but not. I noticed a headline over the weekend about a pay issue in Henderson where they're having to reimburse their hazardous duty employees approximately $250,000. Are we looking into that to ensure their contributions are correct and adjusted?
I'm not sure I'm aware of that situation, but I will contact the manager of the file web team to make sure we look into that further.
Okay.
Any other questions or clarifications? I think we did have a first and second. So all in favor, please say aye.
Aye.
Opposed, no. All right, Dwan, that passes.
Thank you.
So other financial updates, the investment trust budget, is Mr. Willer available?
Yes, good afternoon. One page forward there. Thank you, Sherry. I know when my material starts on page 132, I know it's already been a long meeting, especially in a holiday shortened week. So I'll try to be brief here. Through the first quarter of the fiscal year, overall investment expenses were running below the amount budgeted for the full fiscal year, with a total of $941,000 spent during the quarter, which represents 8% of the amount budgeted for the full fiscal year. Within our investment budget categories, consulting services were in line with the budget, with 21% of the annual amount budgeted spent year to date. In the always difficult legal and auditing services category, you'll note that only 2% of the amount budgeted for the full year was spent during the first quarter. And in the contractual services category, 11% of the budget was spent. But I would note there were a few timing issues there. You'll note that the biggest line item, which is always our BNY custodial fees, nothing was paid during the first quarter of the fiscal year. That invoice was paid in October and was a total of $800,000. So it is accounting for that. We are running in line with the amount budgeted. I would also note the Giant Javaria fee of $60,000 was just recently paid. These are the tax accounting services for investments in our international public equity portfolios, and those are specifically investments in India. And so that line item was just paid this month. Move to page 135, please, Sherry. Thank you. At the total pension level, which this page shows, investment fees and expenses declined by $4.4 million or 10% from the first quarter of the prior fiscal year. And while the total fees for most asset classes increased modestly, mainly as a function of the increase in market values, the overall decrease was driven by the significant drop in specialty credit performance and miscellaneous expenses, which decreased $5.4 million or 27% as the asset class performance and interest expenses experience moderated for the fiscal year. I would note that staff continuously evaluates the reasonability of our manager fees across all mandates and works with our existing managers to ensure that the systems are paying the lowest possible fees based on both the investment strategy and the account sizes. Our objective is always to be in the top quartile of the lowest fees. At the total pension level, on a weighted basis, the overall investment management fees are approximately 30 basis points on an annualized basis across the entire portfolio, so across all asset classes. And I would note that the combined CRS pension portfolio, which is a couple pages forward, is in line with this weighted management fee rate with a rate of 29.6 basis points. As usual, core fixed income has the lowest management fee rate at 6.4 basis points, which does account for the assets that are managed internally. And the real return portfolio currently has the most expensive weighted fee rate of approximately 79 basis points. So with that, I'll answer any questions.
Any questions for Steve? All right, thank you, Steve. Appreciate it.
Thank you.
Well, I believe that comes to the end of the agenda. It's a regular meeting. Are there any other questions or comments for the committee? Hearing none, I want to thank everyone who participated today. Thank you for your time. Thank the staff for all the back of the house work, for the presentations that came before us and all the work that they're doing. And with that, I'll adjourn the meeting. Thank you all very much.